Hello traders, Gary Wagner for Trending Markets just before 12 noon in Honolulu, 5 o'clock in New York. Markets have closed for the morning session. Of course, the S&P E-mini will resume trading on Globex for the afternoon session in just a little bit, but we do have lower pricing across the board in general in the U.S. equities. Dow Jones Industrial Average 17,702, taking it off about 55 points on the day. When we look at the E-mini, which of course is the contract that we follow, that's off about 10 points, 0.5% on the day at 2068.25. It's traded to a low of 2068, so we're actually on the lows right now, the high 2087, and the market under a little bit of pressure. I do believe that we will see this market move back up. I am looking for a rally to occur between, call it now and the end of the year. That's based upon a couple of things. One, strength of the economy, which is fairly robust. Jobs report that just came in was exceptional. Also, statistically speaking, as we've talked about, in terms of having stellar performance in October, when we've seen that over the last 15 years, 78% of the time we had a good stellar performance in October. That was accompanied by a rally either in November or December of this year. Caveat, we need to really look at where the market trades to now that it's under pressure, because to me, the line in the sand and what is really critically important in terms of an area is this 200-day moving average, which right now comes in at around 2058. My sense is that as long as we're trading above that moving average, we are still in a bullish mode. But we have seen where this market has traded below that and having dramatic effects at that. Now, we've seen it trade below that on a couple of occasions. We can go back and you'll see where it spiked into the area, but we didn't have a clear defined break, such as here. This happened, the beginning of July of this year. It was the August meltdown and the way that it melted down that really gave us an indication when it broke below that 200-day moving average right in here that we were in store for something different than what we had seen throughout the rise of this market. Now, you can really see how the 200-day moving average has been a great indicator of whether or not the market has been in any kind of a bull trend or a corrective component of the market. By compressing the chart, we're going back to about 2011, this being 2011 in October, when we had a sizable correction in the market. You can see that there are points in which this market has traded under the 200-day moving average. All of them really corresponded to a corrective period in the market. And this, of course, this last time we saw it break below there, we had what I have termed to be the August meltdown, in which we really saw a severe correction, and really in line with the correction, meaning above 10%. I believe it was 20% from these highs to these lows. So the fact that we are just meandering very, very close to that edge gives us a reason to really look at this carefully, because my sense is that if we can maintain a price point above that 200-day moving average, and we'll go ahead and kind of readjust this chart so we can see this a little bit better. But it's really important when we consider that this is a daily chart, but over the last couple of days, when we look at that, this market has traded to lows, but those lows have all been above this 2058, and we're still a good 11 points away from there. This is what we want to see. Now, what we don't want to do is get psyched out if we see the market kind of dip into that, but we would see some precursors, and one of the precursors we've already seen, which is what we defined as these rounded tops that tend to occur just prior, and not so much right in this one, but just prior to severe corrections in the market. You get a really distinctive rounded top almost every time we've seen this market correct. So we once again have this rounded top, and the question is, will the market break below this point, or will it find some strength and then move back up off of this, trading to new highs? My sense has been that we'll probably see the market trade to new highs, although we haven't gotten any technical confirmation of that. And if anything, over this last week or so, we have seen this market go into a defined amount of pressure. Of course, we got out of the market at 93. It's trading at 69. So we are back to the spot where we actually initially took on the position. And so we want to see how it reacts at this area. The other market that we're really looking at is the dollar index. Dollar index absolutely under some pressure today, off about 1/3%. But as I noted the other day, we've absolutely got the potential to see what's called a golden cross. We've got a 200-day and 50-day moving average. They have not crossed as of yet. You can see that the blue is still above the green when we look at these pricing here, but they're almost on top of each other. And that to me would be an important technical signal. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow on Thursday for another Trending Markets. Bye-bye.